Clarity in chaos is the real edge in trading. The markets will always have noise, opinions, predictions, and endless analysis. But your edge comes from cutting through that and focusing on what truly matters, a clear trade plan. Before we dive into tomorrow's Nifty setup, let's first talk about what the markets did today versus what we planned yesterday. We'll quickly review where the market followed our levels, where it surprised us, and how that played out in terms of opportunity or traps. This reflection is important, not just to validate the plan, but to learn and fine-tune our approach moving forward. Today's video will be important because I will be giving you examples of option charts that I traded today. Once that's done, we'll break down the structure for tomorrow, simplified, actionable, and focused on helping you avoid noise and stay ahead. If this kind of analysis helps you, don't forget to like the video, share it with your trading friends and community, subscribe if you haven't already, and feel free to drop your views or trades in the comments. Let's grow together, one setup at a time. On that note, we'll start with today's video. So today we did a couple of trades, and the expiry trade that I always speak about did play out very well today. So let's dive straight to the charts. The markets opened gap down on the news of Mr. Trump. Sorry for that. Yeah, on the news of Mr. Trump levying another 25%, totaling the net tariffs on India to 50%, right? So let me just quickly silence my phone. Yeah. Markets opened with a gap down, and as is, I have already spoken about it multiple number of times in the past as well. Whenever the market gaps down on the basis of an overnight news, the markets will first try to fill in the gap, right? But the markets opened below the levels which below which we were looking at shorting. Now, this is a clear breakdown of a 4 days of consolidation, right? As we had seen, this market was completely inside the 1st of August candle for 3 straight days, and we were looking at a short opportunity, right? Try to understand how what goes on inside my mind. In case if it helps you, markets open to the gap down. I was looking for a gap filling move from the markets. Now, markets did not completely fill the gap. Now, I don't know how many of you would be remembering this particular concept, which I have always spoken about, is a explosion pivot gap. So, say for example, market opens with a gap up or a gap down and tries to fill the gap, but then fails to completely fill the gap. Right here, you see the closing of around was 568, 24,568. Markets just reached to 543. It was very close to filling the gap, but then again, 20, 25 odd points, the market did not fill the gap and started going down. Now, this is the place where this is a setup of an explosion pivot gap. So this particular setup is where market tries to fill in the gap but cannot fill in the gap. And once the market breaks the low, it gives a good trading opportunity in the direction that you are in. So today markets opened with a gap down, tried to fill the gap, could not fill the gap. This low becomes extremely important for us. And as soon as this low went, the day's low went, this was also the day's low. I entered into the first trade of the day, which was a short trade around 1025, with the SL being right above this particular swing. Now, this particular pullback just that came in just before the breakdown came in gave us the stop loss, which was a much smaller stop loss. In case if this would not have happened, the stop loss around here would have been around here, and we would have to actually substantially reduce the quantities that we trade in, right? So this was the move which was there. Again, I exited on this particular green candle. The reason is simple. It followed the three rules of my trailing stop loss. The high was higher than previous high. The high was higher than previous high. The low was higher than previous low, as well as the closing was above the previous candle's high. Because I was in a short trade, these are the three conditions that I use for trailing, and all three of them got fulfilled in this particular candle, and that is why I had to exit my trade around this particular point. Now, the second trade, I believe, is one of the most important trades, and it was an SL trade. But again, there is a lot of learning from your stop loss trades which you have to take in. And I believe this part of the video is going to be extremely important. So please pay close attention. Around here, this is the 12:15 candle, right? So after the entire fall, the market was kind of trying to form a base, right? It had changed its structure on a 5 minutes time frame, and if you can look around here, this was a double kind of a double bottom breakout, which I was anticipating on the 12:15 candle. If you, I'll quickly draw the structure for you, right? If you can see, this is the first low. Markets gave a first pullback, gave us another dip, and then the high was taken out, right? So this is the 12:15 candle where I actually entered the markets with my stop loss around here. I will quickly pull out because I do not, we Nifty's spot chart is for reference, but the actual trades are made on the option charts. So this is a screenshot of my trade that I had taken today. So this is the 12:15 candle. If you see, I had entered on the 12:15 candle on this particular breakout candle. This blue arrow is being is Zerodha's system of trading from the charts, wherein they mark the entry candle and the exit candle. Now, this was the entry candle, although the entry candle did not break the high of this particular high, which was the parallel subsequent from the Nifty spot chart. But because on the spot chart the high was broken, this is the reason I had entered on in this particular trade with the SL just below this particular swing. Now markets did do a lot of time pass around this zone, not eventually not going in my direction, but ultimately going down. And the lesson to learn from this particular thing is no matter what happens, you do not know what is going to come, right? You were not aware of this particular big move, up move, which was going to come in the market in the second half, right? And we do not predict anything. What we simply do is we plan our trades. So this is where I had planned my stop loss. And as soon as the stop loss gone was taken out, I got out of the market. As you can see in this particular candle, this candle shows the exit. I took a small stop loss of around 15 points in this particular trade. And as I always tell you guys that I shift to the next week's trading. So I'll quickly pull the screenshot down. So this is the 14th August. I always tell you guys what I do in the market. And this is what it is. This was traded in the 14th of August expiry, which is the next week's expiry and not in the current week's expiry. So you do not know what kind of move is the market gonna be there, and it was a good thing that I exited around this particular low which was marked, because post that the markets did go down a lot, and then again a short covering move did come in. Now how did we play that short covering move is something that we need to discuss, but for the time being, sorry for the interruption. Yeah, so this is the move which came in, and this is where we plan our trades, right? So if the SL is fixed at any point, no matter what happens, you are going to take that SL. Entry, re-entry is secondary, and that is something which we'll discuss again. How did we capture or how did we make good money out of this particular move? But then I hope the lesson which I have out of this particular thing is okay, no matter the market will give workout or not workout is something which depends on the market. But if your setup is forming and you have a clear stop loss, you will enter the trade. And as soon as that stop loss is triggered, you are going to go out of the trade, right? So I'll quickly just. So this is the stop loss which I took around this as soon as this low, this last swing was broken, and post that markets did go down a lot as is there in the charts. Now, again, around this point, you could see a clear positive divergence in the market. Now, I could have entered or re-entered into the same trade around this point, but I did not. The reason, I wanted it to form a double bottom again, but the markets gave a move like this. Now, how did we capitalize on this move is something which we'll eventually come to. But this is the point wherein, even though markets were going up right in front of our eyes, so this is the chart of the option that we were actually in, right? We have actually taken a stop loss of 15 points in this particular chart. Depending on the quantities that you trade in, your actual profit or loss will be varying. But again, that is the reason I talk about in the number of points. And if you can see the everything, the same strike price, the same option that you had actually taken a stop loss moving up right in front of you. But because right here, your setup did not form, right? Try to understand this is not a pullback candle, or you cannot consider this as a W, right? This is just a small red pause halt candle which is there, and then the market again continued. And this was the reason I did not enter into the same trade again. But then the expiry trade, right? So anybody who is serious about catching these super crazy good momentum based trades, especially on expiry days, my sincere request would be to do a little bit of homework. Go to Sensible, go to the open interest for today's expiry. It will still be available till the end of the day. Try to understand and analyze as soon as the market started moving above 24,400. right? So if you observe the open interest before that, it was very bearish with major call writing at 24,400, 450, 500. And as soon as market started moving out, those peoples were forced to exit their trades. And that is something that is what we look out in the expiry special trade, which is what I traded in today's expiry. I bought 24,400 call when the market had broken out of this particular high. Quickly have a look at the 15 minutes time frame. This swing versus this swing, clear positive divergence as soon as this particular high, which was 24,450 odd being taken out simultaneously on the open interest data, which is there clearly visible on Sensible. You just need to tick that checkbox of show OI change and select a time frame of last 5 minutes. You will be seeing uh, the amount of people that are exiting these call shorts which are there. And if those numbers are big, trust me, a short covering is on the way. And as you can see, this is what it is. And this was a very good trade in the current week's expiry with a very small stop loss. It gave a very good reward. So anybody who has the knack of trying these zero trades on the weekly option expiries, please go and watch the video, as well as before time runs out, watch out today's expiries OI data change that is there, right? That is something that you need to observe in the live market so that you are in the right side of the market. So overall, good expiry for me. Let me know in the comments box how was the expiry for you guys, as well as market has all tapped into the gap area, which is on the daily time frame around here. We are still inside the parallel channel that we are trading in since a very long time. And we did take support from the gap area. The first bounce also did come in from here, followed by the secondary bounce again, which is coming down from here. So this gap area, as we had anticipated, and this has been there on our chart since a long time. We have it for a reason, and you can clearly see the support that the market has taken from here. Now for tomorrow, this is the daily chart. I'll quickly remove all the drawings. So structure wise, again, there's nothing much. We have actually gone down below this. So this is the gap area which is still pending, but then we have tapped down below this particular last swing base formation which was there post which the move had come in. So whether today's move which had come down after 2 p.m. was it an expiry play, or is it the market forming taking a support from here and then we are eventually going up? That is something that we will be finding out pretty soon. Now today we have made a new low in the markets. This level will no longer be of use for us tomorrow. We'll be drawing our fresh levels. They will be deleting all these. Yes. Tomorrow, number one level of importance will be this. Now, the first trade that I am anticipating, which can play out, is the very rare trade that I always speak about. First green candle, a candle which is showing bullish sentiment, closing above today's high as well as this particular swing high, and then the low of that candle gets taken out. We are planning for a short trade. I'll quickly draw the support zone on the downside from today's bottom till today's high, and this will be the support zone. So whatever I'm taking this particular short trade, these are the levels around which I will be looking at booking my position, right? Again, if the market opens with a sorry, and above this particular trend line, today's high with a pullback, we can also look at a long entry. Again, I will be careful once we are approaching the parallel channel trend line, which is there. But then again, nonetheless, a entry which can be taken in. But again, on a wider period, speaking about it, I'm still anticipating some volatility in the markets, with the markets being sideways for some more time. There are a good number of trappings which needs to be done before the market decides on the next course of action. So be careful and be very quick with your trades. Do not hold on to your trades for a long period of time. So this is the second set of trade that I am looking at. For any short entry, because this was a good enough rally, I will wait for the markets to come back below this particular support zone of ours, and then only will we be planning a short trade. So on the daily time frame, just give me a couple of moments. Okay, so market is in a sideways range only, so we don't need any further levels. I will suggest to keep trading very low for tomorrow. Do not be too excited about trading tomorrow again, because today was a good expiry. Try not to trade if at all possible, but then again, these are certain setups which are there. Plus, always focus on the W's and the M's which are there. And if they are at some important levels like support or resistance levels, that will be of much more importance to us. So, yes, I believe this is the simple trade plan for tomorrow. Obviously, there's needless to say below this particular level, we are absolutely short below today's low. So, I hope the trade plan, the simple trade plan is clear, and I'll be seeing you guys tomorrow post the market. Till then, trade safe and thanks for tuning in. Do not forget to like, share, and subscribe. Thank you guys. Cheers.